Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the manager of retirement services here at VectorVest, and I am very happy to be presenting this week's topic, which is titled Go for the Gold. Now, before I get started, let me begin by saying that the title is not meant to imply that you liquidate your entire net worth and put it all into gold stocks or gold ETFs. Rather, it is to convey to you simply the consideration of allocating a portion of your portfolio at a time when safety and diversification are so important. Right? Global economic conditions, geopolitical tensions, interest rates, and currency exchange rate fluctuations, these are all factors that we're experiencing now, and they influence the overall markets and the performance as a result of gold-related stocks and ETFs as well. So when investors are worried about inflation or political instability or other macroeconomic factors that I talked about, that could threaten the value of traditional investments such as stocks, bonds, or whatever else you may be in. So the investor will often turn to gold to diversify their portfolios and hedge against any more potential losses. So we're going to talk about some gold stocks, gold ETFs, right? These are often considered a safe haven investment in volatile markets because they're designed to track the price of gold. Right? Gold is viewed as a safe haven asset because it tends to hold its value during times of economic uncertainty and market turbulence. Again, what we're experiencing in the bigger picture here. Okay, so that's the overview for Go for the Gold. Briefly, before I get started, the conversation always comes up when we talk about gold. Is it a commodity? Is it a currency? Well, first, is gold a commodity? We think of commodities, we think of products like coal or corn, sugar, things like that. These are the more typical definitions of what we would call commodities. Now, gold is a commodity, okay, just might not be considered what you call the traditional commodity, right? Which is why it can be beneficial to your portfolio because it is more than just a commodity. So when we relate it to as being a currency, right? Even though gold doesn't really meet all the necessary criteria to be considered a currency, remember it was used as a currency in many economies up till the early 20th century, but financial institutions, governments, central banks, they continue to hold gold in reserve. The individual investor, however, does hold gold usually as a hedge to their other investments. As we talk about currencies, there is generally, as I'll illustrate in a few minutes, an inverse relation of gold to the US dollar, generally speaking. And as I mentioned earlier, currency fluctuations certainly play an important part of the price movement of gold. So with that foundation there, the goals of this presentation, what I'd like to do here is illustrate the power of the Midas Touch timing system, the process of knowing the best times to enter into a gold position. I want to show where to find the ETFs and stocks within the sector and industry. I want to talk a little bit about, again, the considerations on allocation when it comes to sizing positions here. I am not in any sense at all saying, put all your chips on the table on gold stocks. That is not what I'm trying to do. And I want to just talk about some examples of managing the position once you're in. Let's go ahead and jump into the program and take a closer look. So from the home page here, the first thing I'll talk about is, coincidentally, ironically, when I look at gold on my home page, we see with the market up after a very strong run in both GLD, and I'm going to talk more about GLD and GDX in a moment. These are the two ETFs I'm going to focus on, but they're both taking a little bit of a hit today. That's because the overall market is moving higher, but gold has been on a great run, and in fact, this may be setting up some good potential entry points, as we'll talk about in a minute. The first thing I want to do is talk about, again, illustrating the power of the Midas Touch system that we use, that was created at the very late 2009, 2010. It was introduced. I am going to go to my Graphs tab, and what I have showing on my Graphs tab is the Midas Touch graph, which is found in the graph layouts, right under the Graphs tab in the VectorVest program, and I am on the Midas Touch graph system. Okay, again, this was introduced back in late 2009, 2010. And it was a great way to go into the program, and specifically for gold. And as we've learned, we can do it for other industries and individual stocks. But it was created for the gold bugs index. Now that's what we call the HUI or the HUI. Each Monday in our daily color guard report, we try to update where gold is using the Midas Touch system, and we do it with gold bugs index. Now I'm going to talk specifically in this presentation about the gold bugs index, which tracks the gold miners, and I'm also going to talk about the ETF GLD, which tracks the actual price of gold. Okay, and we'll see they do run, they correlate pretty closely, but we're going to take a look. First, let's talk about the Midas Touch graph. The first thing I'm going to do is I'm going to come over to my control panel and I'm going to take the price of the gold bugs index off the screen. And one of the reasons I do that is because the whole idea of the Midas Touch is to use moving averages, right, to take away some of that shorter term volatility and be able to recognize the true trend, in this case of the gold bugs index. So we use, on the upper portion of the graph, the green line is the 10-day moving average of the stop price of the gold bugs index. And then we use this, and we lay that over the 65-day moving average of the stop price of the gold bugs index. So when we see that shorter term moving average move above the longer term, that is a bullish indicator. Down below, we have on the subgraph relative timing, and here we use the 40-day moving average of relative timing, right? Oscillating over that zero line, anything below 1 being unfavorable, anything above 1 being favorable. The idea of the Midas Touch graph is to find our entry points when we see the 10-day move above the 65-day on the moving average of the stop price, and the relative timing indicator, the 40-day moving average of relative timing, move above that 1 line. When we see that, that is an indication that it's a pretty good time to look to get into gold. And the date I'm going to use here is November 16th. As you can see, we had first the RT moved up, and then it was confirmed by the 10-day moving above. Now that would have been, if I put the price back on, a pretty good time to get into, in this case, GDX, which is the ETF that tracks the gold miners, okay, which is what the HUI tracks. And then to the downside, I'll just take a moment and talk about where we had the bearish move with the 10-day moving below the 65 and RT going below 1 would have been a great time to either get rid of any positions you might have had in place or play gold to the downside if you wanted to be more aggressive buying puts or whatever bearish trade you wanted to place there. Historically, the gold bugs index using the Midas Touch has been very, very helpful and a very accurate timing system. Now, like any timing system, any moving average, there will be fluctuations, there will be whipsaws, but historically worked very well for our purposes of looking at gold. Now, what I also like to do is, again, I'm going to add GLD here, which is the ETF that tracks gold. And if I go ahead and put that on, we'll see a very similar pattern there. Both of these are found in commodity futures under ETFs, which I'll illustrate in a moment. But we see very, very much near the same time frame here. 1160 was actually a day or two later, but we got the up signal for GLD as well, and that has moved very nicely since mid-November when we saw that low, and then we got confirmation on the signal, and a great time to enter in to a gold position here. So the Midas Touch has been a very powerful tool within the VectorVest program, simply using the moving averages of relative timing and the stop price of whatever underlying asset you choose to look at. So for our purposes, again, I'm going to use GLD and GDX. Now, while I'm here in the graph section, what I wanted to do was also talk a little bit about how gold moves, and as a safe haven or as a hedge for your other investments, I want to just show the correlation of gold with a couple of different things. What I've done is I've put UUP, which is an ETF that tracks the US dollar. Okay, it's the bullish ETF on the US dollar. And I put gold here on the subgraph. You're able to put several graphs on your graph page. And just as a visual here, I'm looking at a 1-year look back. And what I see is on the upper graph, as the dollar was stronger throughout most of 2022, right, we saw gold in that inverse relationship, right, struggling a bit until it met that low again in November. As the dollar began to weaken, we saw gold in that inverse relationship, looking at this the safer haven, right? And so gold has been on a wonderful run since November. Again, down today, but perhaps finding some support. And again, maybe not the worst time to maybe begin to build a position there as you allocate some of the resources that may not be invested in the current market. So that's comparing it to the dollar, again, to illustrate that inverse relationship. What I'd also like to compare it to, again, we talked about in an uncertain market, and in the introduction in the VectorVest views, I talked about what Dr. DiLiddo wrote about in the views back in May of 2010, almost 13 years to the day. He commented on Midas Touch timing system about a week or two before, showing that ups move, and then how gold responded after that, and it was the beginning of a very nice run. Because of market conditions is what generally is going to do that. So what I've done is put, for interest rates, to illustrate interest rates, I put T-bills on the upper portion of the graph from our market climate graph, and I put the price of GLD, which again is not the gold miners, but rather the gold price itself. As interest rates continued to rise, as the Fed continued to raise interest rates, right? There's a reason they did it. It was because of inflation. They're trying to slow down the market. There's some uncertainty. There's some macro headwinds there. That's when we generally see gold, again, as that safe haven. Okay, so we've talked about the Midas Touch process, understanding when that signal to enter is. I talked about some of the correlations. Now what I want to do is go into the Viewers tab and show where we can find the gold miners and other gold ETFs. I've talked about GLD and GDX. Those are the ones that I'm focusing on, but there are, of course, many others. There's leveraged ETFs that track gold and silver. There are, many individual gold mining stocks that you can find. And to find that, what I've done, I've come into the industry viewer. I clicked on the Viewers tab. I come to the industry viewer. And what I've done is simply clicked on industry to sort these alphabetically for our purposes of me just pointing these out to you, right? So we're sorted alphabetically. The first thing I'm going to do in the industry viewer is I'm going to scroll down and I'm going to find the mining industry. So excuse me while I scroll down here. We get to the M's, and here we find mining. We have mining, gold, silver, other, and uranium. I want mining, gold, silver. What I'm going to do is right click on that line and I'm going to choose view the stocks within the industry group. When I do that, it's going to bring us all of the individual companies, right? These are all gold and silver miners. Many of these are tracked within the ETF called GDX. Right? This is why I'm using the ETF. Again, I began trading GDX back in 2010 when the Midas Touch system came out, GLD and GDX back when that occurred. So it was a great time to begin investing and trading in these gold stocks. But industry, mining, gold, silver is where you're going to find. There's over 200 stocks. I'm looking at the top 100 here. Okay, so you're going to be able to sort through these. They're sorted by VST. That's how you'd find many of those. If I close that for a moment and I come back into the industry viewer, the other place to find the ETFs, again, I'm going to scroll up to ETFs. And as I scroll up, I'm going to find the ETFs for commodity futures. Okay, commodity futures. When I highlight that and right click. I can look at the stocks within that industry group. And when I bring that over, here's what we're going to see. In the top 10 here, again, you've got gold and silver and other issues here, but I'm focusing again on GDX and the GLD. Again, they're down today, but most of the industry is down again because the market somehow has found good news for whatever reason to move higher today. Certainly, one day's movement is not going to stop me from implementing gold as a hedge in my portfolio. So those are the two that I'm focusing on. I just wanted to show that there are certainly other choices here, but the ETFs that track these are pretty good. So I'm going to go ahead and close that. And what I want to do is go back into the stock viewer page and just give you an idea of the power of the Midas Touch system. So if I type in GLD and I go back to that 11/16 date, which is when the Midas Touch signaled the uptrend, I'll click OK. Let's just go ahead and quick test that, and just to get a sense of how it did. Now the price is up over 13%, annualizes out at about 28.5, and the key here is that it has outdone the SPY significantly. That's simply just taking the time to pop up the Midas Touch graph, see where gold is, and that entry point is so important. Now let's go up and do the same thing with the GDX. Now remember, this is the gold miners. This is what the HUI, or the HUI Gold Bugs Index, tracks. And let's go ahead from that November 16th date and go ahead and quick test that one. And we'll see here we're up over 28%. That's 60% annualized. And again, just crushing the S&P 500 since that November upturn. Okay, just some quick tests to show you, to illustrate the power of having, just like any stock trade, any option trade that you might do, right? You have to know when to buy, what to buy, and then of course the when to sell. So we can talk a little bit about the when to sell side. I'll go ahead and close this. Again, just wanted to illustrate the power of getting in the right time. I'm going to go into portfolios, and I'm going to share with you one of the portfolios that we use in our retirement coaching group. I have both a dividend payer stock for income, and we have a growth portfolio using ruler stocks. Simply as an illustration, I'm showing a portfolio that currently will generally hold, when fully invested, 10 positions. We currently have $64,000 of buying power. We have 7 of our 10 positions are filled. So I was talking earlier about one of my goals is to show you some considerations on allocating to your portfolio. So what if I were to simply, instead of going out and buying, more equities, right? Our investment plan here has us diversifying through industries. But right now I'm looking at a way to perhaps hedge the investment I have here. So with $64,000 in there, what could I do? I could go out and buy 100 shares, roughly. That's about $20,000 for 3 positions to invest, right? If you're investing the average value of the portfolio. I could go buy 100 shares of GLD. I could go buy, 200 or 300 shares of GDX, as it is obviously a lower priced ETF. Right. So as I stated at the beginning, I'm not saying, dump everything and just go and buy all, 10 gold stocks or ETFs. There are many ways to hedge and protect your portfolio. Using gold as a safe haven and a hedge just happens to be one of them. I could do the same in our blue chip dividend portfolio. Here again, we have only 6 positions currently. We have plenty of buying power. I can go out and fill 1 or 2 positions with a good hedge for the portfolio. So again, when we're talking about allocation and sizing the positions, I would do it very similar as to how I would put positions in any of my portfolios. You should have your plan written down. What is the percentage of each position? Right? What do I allocate to these positions? And just use that same concept using gold, whether it's GDX, GLD, or any of the other ones that you might feel more comfortable trading. From here, I'm going to go back to the graphs and talk a little bit about managing the position once you're in that position. Now, our portfolios that I'm illustrating here use Profit Locker Pro or just Profit Locker. In this case, it's Profit Locker. For ruler stocks, we use Profit Locker Pro. Gold, it can be volatile at times, right? So we do have to have some risk management in place. And so we want to be able to know not only when to buy and what to buy, but when to sell, or at the very least, protect that position. So let me go back into the graphs tab. So I'm looking at the Gold Bugs Index. We already talked about a great entry point would have been here on November 16th or the morning of the 17th, would have had you in for a nice run. How do I manage? What's a good way to manage the position once I'm in? Well, here's one way to do this, and I had the pleasure of being on the line with Dr. DiLiddo just a day or two ago, and we were talking about the presentation, and the first thing that Dr. D showed was if I put the recommendation here, right, we had that buy signal came, and then we got the confirmation to the upside. And Dr. D had pointed out, well, you had that buy rating, which we still have now. And if, again, of course, it can fluctuate. But what if I use that hold rating as a good time to become defensive, right? To become defensive. Now, what does that mean? It means, of course, I could just close the position, wait for the next clear entry point, or like we do with many of our more prudent or conservative holdings in our portfolios, is become defensive and either buy protective puts. Perhaps we can sell covered calls against these, which you can easily do against GDX or GLD. So we can defend these in the shorter term as we continue to reap the benefits from that hedge in our portfolio. So using Profit Locker, either Profit Locker or Profit Locker Pro as your stop criteria. I wouldn't use too wide of a stop. I would certainly advocate for protective puts, and certainly even more so covered calls against these, as we were able to watch the recommendations along the top. What I wouldn't do is wait for the bearish crossover, right? Because that can take a lot of time. As you see, to wait for the bearish crossover would have given back much of the profits that you had made here. So one of the things I would not do is wait for that. Now, there's another great thing you can do, and that is, finally, when it comes to managing these positions, is I'm going to go to the near perfect indicator graph. And certainly for entering and using once you're in the position, using the near perfect indicator, I'm focusing on the subgraph here. And if I scroll down, for those who may not be familiar with the near perfect indicator, the NPI, this subgraph is using moving averages on relative timing. It's using a 5-day and a 40-day moving average. So again, this is not the Midas Touch, but using the NPI, we see the 5-day moving across the 40. That would have been a great entry point for GDX or GLD at that point, right? You would have had a nice entry point back here, and it stayed positive. And again, it shows that great exit strategy here. So the near perfect indicator, the Midas Touch are great. And then just using, making sure there are some other stop criteria or exit strategy in place, right? And so we would manage it just like any other position. So just to summarize here, we talked about, again, some of the goals I had for this presentation. We talked about the Midas Touch. I showed you where you can find ETFs and stocks within the industry viewer. Talked a little bit about allocation and sizing the allocation. And then finally, just some examples of managing that position once you've entered the position. So remember, when you do it right, when you use the power of the VectorVest program to understand when to enter, when to exit, and find the best ETF or gold miner stock that suits your objectives, when you do it right, going for the gold can be a great investment within your portfolio. And hopefully this presentation will get you headed in the right direction. Thanks for taking the time, and we'll see you next time.